investment property, it's a definition given. Whenever there is any long-term asset, whenever there is any long-term asset which is held for rentals, for collection of rentals, and for collection of capital appreciation, or both. Either you have hold that particular piece of property, okay, or particular piece of asset to collect rents. It is not your core business activity. Please make sure, if your core business activity, if your main business activity is to put things on rent and earn rental incomes, then it would be classified as IAS 16. If your business is something else, but you have invested your surplus money into any asset and you're expecting to collect rents, or maybe you are waiting for its value to increase and get and become millionaire, maybe, okay, or both, maybe collect rents till the time possible, and whenever you feel like real estates are really going high, let's sell it off and get the gain. So if your intention, if your reason behind that asset is to collect rents or wait for the value appreciation, or maybe a combination of both, then we'll say that asset is good to go ahead and be classified as investment property under IAS 40. It should rather not be used for business purpose, that is for production of goods and supply of services, for collecting rents and for admin purpose, or it should not be sold in ordinary course. This means it should not be property, plant and equipment. It should not be an inventory, because inventory is the one that you manufacture or hold it for making it saleable in the normal business activity as part of your core business activity. So if you are holding any long-term asset, maybe land, building, a part of building, maybe not entire building, but a flat, but a shop out of it, or both, held by owner or by lessee as ROU asset, right of use asset. Right now, for time being, you can ignore the lessee part and ROU part. When we will read IFRS 16, that is leases, then we'll understand what is lessee, how do lessee record their asset in the books of account. Okay, so right now, for time being, you can leave this lessee keeping this asset as ROU asset for time being. Okay, next comes owner occupied property. What is owner occupied property? Firstly, it is held by owner or by lessee as ROU asset for use in the production or supply of goods and services, or for admin purpose. So what happens? Example, let's take an example, parent company and subsidiary company. Do you know a little about parent and subsidiary company? Whenever one company acquires another company, and if they have control over another company, do you have any, I would say, a little idea about parent and subsidiary, holding and subsidiary? Have you ever heard about? Tell me yes or no.
Yes.
Yes.
Okay, Vijay will say yes.
Yes, ma'am.
Okay, so we have little idea. We do not need to have a detailed knowledge right now. It's fine. So parent, if parent has a right to control subsidiary, if parent is taking all the decisions regarding subsidiary, then we'll say parent has acquired subsidiary, parent has control over subsidiary. For example, parent has bought, has acquired an asset. An example, parent has given this asset to subsidiary and said that, okay, subsidiary, you can use this asset. It has given subsidiary a right to use this asset. Given right to use the asset. Okay. Parent has acquired, parent has purchased, parent has bought the asset and transferred it to subsidiary that, okay, subsidiary, you can use it for your purpose. Now, what happens? For the purpose of parent, it will be classified as investment property. For the purpose of parent, because they are not using in business, they will be classified as investment property. And in subsidiaries books of account, since they are using it for business purpose, they will classify it as investment property, as property, plant and equipment. Now, when you consolidate in consolidated statement, actually this is little advanced version, okay, of the concept. We will be reading in detail when we read lease, when we read our consolidation concepts. Right now, just understand this: parent will record it as investment property, subsidiary will record it as property, plant and equipment. But in consolidated financial statement, since both these entities are considered as one single entity, this will be known as owner occupied property. This will be treated as owner occupied property. Okay, this will be treated as owner occupied property because it is owned by the group. Because it is owned by the group. The group person owns it. Therefore, it is known as owner occupied property. Anybody, any doubt regarding understanding what is owner occupied property? Good, very good, super. Good. Quickly confirm. Do you understand what is owner occupied property? Within the group, example, if parent holds it and it has been given to subsidiary, it is known as owner occupied property. Now, just to understand, if subsidiary is using it for business purpose, they will classify it as property, plant and equipment. Maybe if subsidiary is subletting the same and collecting rents from the same, then subsidiary will classify it as investment property rather. Okay, it depends upon what is the use case, what is the purpose. So in their individual statements, they will classify according to their purpose of the asset. But in consolidation, they will be classifying it as owner occupied property. Let's read the definition of owner occupied again. Owner occupied property is held by the owner, is held by the parent, you can say, or by lessee as a right to use asset for use in the production or supply of goods and services, then it will be classified as property, plant and equipment. If they are held for rental purpose, they will be classified as investment property. Next, fair value. We have already learned about this as per IFRS 13. It's an exit price, the price that will be received on selling an asset. Yes, Ashwani, please ask.
Ma'am, if in reverse case means if subsidiary have if parent company consider this plant property plant equipment and subsidiary consider it as a
As investment property.
yes, so in that case, what will be the end result?
Okay. If see, parent will always classify it as investment property because parent is not using it. Instead, parent has given it to subsidiary and I said that, okay, use it. And in that case, provide me some payments, maybe any rental payments. So I would say instead of parent and subsidiary, understand it as provider of asset, owner of the asset and user of the asset. Okay. Example here, parent is the owner of asset, whereas subsidiary is the user of asset. Got it? Even it can be vice versa. Do you understand? Instead of identifying parent and subsidiary, let's understand one party is the owner of the asset, whereas another party is the user of the asset. They've got ROU asset, right to use the asset. Okay. So in this case, the owner of the asset has no intention to use it. Instead, it has transferred the right to use. Okay. It is not using it. And in return, they will be collecting rent payments, lease payments, correct?
Yes.
Okay, so therefore, owner of the asset will always classify the asset as investment property. because they are not using it for business. Instead, they have transferred it to somebody else and said that, okay, I give you right to use the same. Got it? You get this? Okay.
Okay, ma'am.
So owner, got it? Owner of the asset will always provide right to use asset. Owner is not recording, and therefore owner will always say, let's record it as investment property. Whereas for the receiver of the asset, it depends whether they are using it for business purpose or whether they are subletting the same and collecting rents. If generally the subsidiary uses it for business purpose, for production and supply of goods and services, or maybe head office purpose, admin purpose, therefore subsidiary will classify it as property, plant and equipment, or vice versa. Again, maybe subsidiary is the owner of the asset and parent is the user of the asset. Then in this case, it will still be considered as owner occupied property because it is within the group. The group owns it because the group, a member of the group owns it. Good. Okay. We were talking about fair value. Fair value is given as per IFRS 13. This is the exit price that you will receive on sale of an asset, or this is the amount that you will be paying as a final amount to transfer a liability, or I would say settle a liability in orderly transaction. In orderly transaction means without any influence, without any bias, without any compulsion. Instead, buyer and seller are willing to enter into the contract. They have power to negotiate. Orderly transaction means buyer and seller are willing to enter into the contract and they are having power to negotiate. Whereas if we talked about a compulsory acquisition made by government, we said that this is not the case of orderly transaction because the seller did not have a choice whether to sell or not. The seller did not have a choice what amount to quote as a sale deed. Correct? Give me a quick thumbs up. Are we good? It is not ordinary course of business. Instead, it is orderly transaction. Ordinary course of business means, example, you have a showroom and you sell, example, furniture, maybe refrigerator. Then these are your inventory. So anything that you're selling in ordinary course of business is treated as your inventory. Vijay, are we clear? Okay. It should not be ordinary course of business. Correct. It should not be your business to make sure that, okay, you are buying and selling. Okay. Next, between market participants, regular buyers and sellers, it should not be with related party. Instead, it should be with unrelated party at the date when we are actually calculating measurement of the fair value. So fair value measurement date is known as measurement date. So we know about IFRS 13 also. Fair value. IFRS 13 tells you how to calculate fair value.